Arish Sharma of ONGC, Chairman of ONGC, joins in to talk about that. Mr. Sharma, good morning to you. Are you hopeful that these long pending reforms, for many years you've spoken about them, but nothing has happened, that something could happen this time round?
Oh yes, they are very positive signals. Already we find that discussions have begun in the right earnest. And, earlier the government had all the intentions to put through the reforms, but because of the pulls and pressures from various the quarters, they were not able to carry forward. But I see a very distinct positive the signs on that, and I find some dialogues have already begun.
Would the current formula which is being speculated on be acceptable to you, that till oil prices, crude prices do not cross $75–80, till that free pricing may be allowed? Would that be acceptable as a first step to you, or you would want to start with a clean slate?
Well, that is the recommendations of the high power VK Chaturvedi committee, and that is what they had recommended. I wouldn't like to do any guesswork, but they had done a lot of due diligence, lot of application before reaching those conclusions. So I'm sure the government will take the update, but that was the time the crude prices were in excess of $120 a barrel. I'm sure the policy thinkers, they are already deliberating the issues. They will take all the factors into consideration. But one thing I'm very positive we find, and that we foresee stability coming into the sector, and that will be a big comforting factor for all the players, all the stakeholders, and we are quite excited about it.
Mr. Sharma, good morning, sir. This would be the basic framework, though. What's being talked about, that a ceiling is set, for example, say $75 to a barrel. A quarterly review is done on the quarterly average of prices, and this, of course, would include only petrol and diesel, not LPG or kero.
See, these are, as I mentioned, these are the recommendations which came out of BK Chaturvedi committee. And now the thinking process is on how the things get decided. I don't think I should hazard a guess there. But one thing which I said, the thinking process has already begun. And a lot of due diligence is going on. So we have also been asked to give our views. So we have been sharing our thoughts. So let's see that, and I'm very positive the way the things have begun in right earnest. We see a stability to come very soon.
In the near term, though, Mr. Sharma, there has been some concern about the fact that perhaps even in Q4, ONGC will have to bear a certain amount of subsidy burden. Would you care to comment on that, sir? Is that confirmed, and what might the quantum be for Q4?
Yes, we have already received official communication to that effect yesterday. So for Q4, our subsidy burden is 852 crores. So that is already made known to us. So based on that, we are now finalizing our numbers.
You would have been hoping not to pay anything for fourth quarter, Mr. Sharma?
Well, that was the feelers, that was the provisionally indications given to us. But, we must appreciate for the government, and with so much of volatility in the total the crude oil prices that we have witnessed, especially in the last the 12 months or so, it has been a very, very difficult task for the government to take a very long-term view. But what I find now, the thinking process has begun, and let's see that for the next fiscal we'll have clearly laid down some mechanism based on which we'll be able to make our projections.
Just one word, there's been such a lot of focus on the infrastructure space, or talk about the infrastructure space post this new government coming in. Are you feeling more confident as a management, Mr. Sharma, to go ahead with your capital expansion plans? Because a lot of Indian companies actually derive a very large part of their order books from ONGC's capex.
See, I have been quite vocal, and these issues we have constantly been discussing in the board. And I must say, at the worst of the times when the things were, quite uncertain, even at that point of time, the board had decided that we are not changing our capex plans. And I'm happy that we maintained that, because once you put your investments plan on the hold, it takes a long time to restart the process again. So we are on track. We are going ahead with our all investments plans which were there in place a year before.
Along with retail pricing, Mr. Sharma, are you hopeful that there might be some change or upgradation on gas pricing as well, sir?
That is something, in fact, I'm looking forward very anxiously, and I'm confident this will come through. In fact, I must share on this that Cabinet had decided in May 05, and that was a decision at the highest level, that the administered price of gas need to be revised, which remain unrevised for the last more than 10 years. So that decision taken at that level in May 05 and now in May 09, that has not been implemented. Again, there have been a lot of pulls and pressures from various quarters. I know the administrative ministry, they had worked out the outline, and the proposal, I understand, is now will be taken up for the due approval. I do hope that revision in the APM prices for gas comes very soon.
What would be your total capex in the current fiscal, Mr. Sharma?
Current fiscal is in excess of 20,000 crores for the domestic activities. And overseas, of course, overseas we more or less we keep an open book depending upon the opportunities that come. So decisions are taken on case-to-case basis.
Of this $4 billion of capex that you're talking about for this year, has the management taken a conscious decision to give global bidders for your projects a bigger chance? Because last couple of times, the L1 status has been with some of the non-Indian companies. Is it a conscious shift away where you're seeing better value given by the non-Indian companies?
Udyan, I must clarify. I don't think in case of ONGC there has been any concern by any domestic or foreign party that we have tried to be biased or favored either domestic party or the foreign entities. I see no change in our the practices and procedures in that perspective.
Has pricing for some of these orders or tenders scaled down though, Mr. Sharma? I mean, we understand, for example, something like the offshore rigs were trading at far higher levels than they are today. In that sense, is ONGC looking to recalibrate and rework the kind of tenders you've had?
See, we have already done a lot of exercise on that, and I'm happy that after the crude prices came down, the rates of oil field services have come down except for deep water and ultra deep rigs, because still there's a lot of shortage in that category, and especially the Petrobras, they have a very ambitious plan. They are coming out with tender for 28 more ultra deep water rigs. So in that category, the shortage continues to be there. Prices continue to be high. Other than that, we find the prices of the jackup rigs, the onshore rigs, the other services are coming down. And wherever these commitments had not been made, we have gone ahead to relook, to ask for the revised prices. We have been working on that for the last, I must say, for the last 5-6 months, we have been working on that area.
One of your service providers and significant service providers, Mr. Sharma, Great Offshore, recently lost out on a 1,000 crore order from you. Have you decided what to do with that order, and any reasons why you may have done that? Is it because of the recent change in hands of the stake, etc.?
You see, first and foremost, for a PSU like ONGC to maintain the sanctity of the tender. In this case, and I am sharing when this tender had come out about 3 years back, and therefore that time there was an acute shortage of even this jackup rigs. So we had in the tender, one of the condition was that if the rig does not get mobilized by May 14th, the contract will get automatically terminated. And some of the parties, because of such a stringent condition, did not participate in the tender. So in that perspective, that we had to maintain the sanctity, and the date that came and automatically there has been termination. So, and we know that in this category the rates have come down. There's no way we could have gone ahead beyond our tender norms to give the extension at the still higher rates. But one thing we have been, the management has been very considerate. Normally, whenever a rig or any services do not get mobilized, our policies say that we'll put the party on holiday. That means they'll not be able to participate in the future tenders. Here we have realized that it was not the intent of the party. They wanted to mobilize, the rig did not get completed, and as per our understanding it will take another year and a half for the rig to get completed. We can't wait that long and can't hold the same prices that long. So it was consciously decided that we'll not be able to give extension. But surely the Great Offshore, they have been supporting our operations for over 2 decades. In terms of the jack-up rigs, in terms of the vessels, that credibility of the party is very much there, and taking all those factors, we have decided as a special case not to put them on holiday.
That's a very measured response from ONGC, Mr. Sharma. But as you said, time is probably of essence. I mean, the operations were to start from the 15th. What would be the preferred process to go to the second highest bidder that you had when Great Offshore had actually put out the bid? Considering, yes.
Our procedures do not permit, and these procedures have been validated out of various guidelines, directions from the Central Vigilance Commission. Procedures do not permit to go to L2 bidder even if the L1 is not able to mobilize. The procedure clearly says if the L1 is not able to mobilize, you have no choice but to cancel the tender process and start it again. And that is what we have done.
So you will tender again, Mr. Sharma, or is there to just cut the process short, you'll go to someone like an Aban Offshore?
No. We will not go to anybody else on nomination basis. And as I said, this is a category now. In the lot of jack-up rigs, they have been constructed in the last 12 months or so. So there's a supply is comfortable. We shall only go through the tender process. No nomination basis, no L2.
Good luck, Mr. Sharma.